The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this very first day of March. Ooh, quite a start to March, I'll tell you. The Dow had a very overnight, let me just show you here in the futures. Overnight, just out of the blue, suddenly you started to see the futures start rallying and rallying, and where can I go? Let me go to the 10-minute chart. So we go to the 10-minute chart. Here we are, big pullback into the close. Then it retests very nicely, and then it just suddenly starts creeping up. Peak A, B, C, D, E, even an F, and then it stalls at about 10 o'clock last night. Then it goes sideways, makes a cup formation, has an inside Chapman wave A, B, C, D, doesn't make a new recovery high, pulls back, and then out of the blue, boom, at exactly 3:20 in a.m. Eastern time last night, started another move, and that starts a big push to the upside and rallies all the way to the 2808.25 area. So let me show you in the 5 minutes a little bit clearer here. For 5 minutes, that's that next move to the upside, like a single leg goes to a peak E with two dojis, and then the third one was where it started to break down, and it plunges from the 2808 area down to the low of 15 minutes ago, which is a low of 2783. Now, this is very interesting. So what I did is I drew this little circle in when we were down at the bottom there, saying it looked to me like there could be a bit of a bounce. Yep, and there it is, that exact circle. We're right in it right now. So we've gone from the 2783 level to 2792. A nice bounce, actually. This is going to be important because I had a question in the den. Basil, do you think that the Dow will close into the red? So my thinking here is that if any forces out there, and if any of you remember when Rubin used to punch the button and the dollars used to flow and the market would be down really sharply, and then out of the blue we just turn around and close high. This was back in the Clinton-Rubin days, and we've seen that over the years, but not quite as obvious as that. However, I think that what we've just seen is really important. Now let me show you why. If I want to talk about a particular pattern, there's a pattern that doesn't happen often. It happens quite rarely. But when it does, it should happen not just in one stock. It should be like a myriad series of stocks of all different categories doing the same thing. So let me show you something here. On the left side is the Dow chart. You see this up channel? It isn't from the low. For anyone who draws in trend lines, you might have learned that if you take the low, the steepness of a rally can make that low trend line be taken out really quickly. I like to think of it from as a start of the first pullback and trough that's made after that initial thrust. So here you are. That pink line is showing you the trend line. The green line is showing you the tremendous, unbelievable resistance at exactly the green line from the very first start. That's where we began this at the 9-period moving average cross on the 28th of December. That's the roof, the ceiling of this up channel. And then it keeps bouncing sideways, goes sideways, and hits that pink line, and boom, it's like an electric shot. It springs to the upside, and then bam, it hits the got a helmet on, don't worry. It hits the head right there and bounces back. But all of a sudden, you're using up some time and some price, and here's this trend line. Now I'm going to make it much bigger, and you can see where we are. This is really important because it's the green line right there. The 9-period, this is the Dow, 9-period exponential moving average. 25,894 is the support. Today's low is 25,914, it's a little bit above. Days young. And let me just check this if you don't mind here. I just want to see something. Yeah. So I'm going to just talk about this in a different sort of way Let me put that in there. Okay. Within the context of the market, what we're really looking at is this particular channel, this up channel. Look how long it is. It just keeps, it's just an amazing looking thing. I said about a week ago that there's a particular formation that I look at, and a stock that I was looking at that really represented what I'm anticipating is a stock called Viva Systems Inc. At the time that I did this, I think it was just before that top, and it was at around about the 15th or the 19th, I'm not sure. And what I said was, within the context of what we're looking at, this is the pattern, and I drew it in. So we were here, and over the weekend, that last weekend, I'm thinking, okay, let's see what we've got. And it kind of confirmed to me, this is the pattern that I invariably would see over the years, because it doesn't happen often. It's a series of times that it's occurred, these narrow up channels. When it breaks, it doesn't just make an inverted V, not this particular pattern. You look for a candle, you look for round numbers, you look for a bunch of things. But what I do look for is a break of the channel to the downside, and then a bounce. And that bounce can either go slightly above the previous high or about to the high, and then it pulls back quite sharply. So within that context, what we're looking at is I drew this in without we didn't have no prices. I just drew in this V-shaped pattern. I made it go to a slightly higher high. I haven't touched this. This is exactly the dashed gray line that I drew, and then it pulled back. So what happened is Viva went down to the 14-period moving average. The first time it broke the 14-period moving average in just forever. And then what happened was it rallied, and then there was an earnings news report. It never made a new high, but an earnings report on the 27th, and it spiked, boom, to the upside. And what did it do? It went to 124 round number, and then it plunged intraday, and now it's just hanging around, and I've got this downtrend line here. So that's the pattern that we look for. Does it work always? This happens not that frequently, but that's the pattern that is in my mind as some kind of a, how can I put it? It is some kind of a bellwether, some kind of a way of looking at a template. Let's call it a schematic. So within that context, let's go back and we'll look at the Dow, and we'll see whether or not it's going to happen again. So we've got the pullback. There could still be another little, I don't think so. I think we used up all the ammunition this morning, but there could be another little pop, maybe even to the G/C could become a D, and then you got to be careful. So far, we haven't got anything other than a very nice bounce today, holding the trend line support. But if I'm correct, we should see something like this. We should see a down move, a bounce, and then another move, another bounce, but with a lower high, and then that's the one that starts to tell you that we've made some kind of a top of importance. We're not there yet. This is just the process. It's the start. I'll be right back. Dow's at 45.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, Ron, we're back. So let me just go through these again here. So the Dow, it's up 38 points. It's holding okay so far, but if it starts to go red, and in fact, if it goes minus 30, you could see an acceleration into the close. So let's keep that in mind. And now I wanted to show you a couple of things. The TLT. Yes, for quite a while now, I've been talking about the yields, and I've been saying everything I'm looking at here suggests that the yields are in a trading band. But if there's going to be a break, it just looks as if it could be to the upside. We haven't really had that up until now. But I've been spending quite a bit of time over the last, this entire week, talking about how the yields could do the job of the Fed for it without them officially raising rates. Because if the TLT breaks under the 119s, that'll be really important. Where did it go to this morning? The low was 119.01. Yesterday it was in the 120s. Today it is just about to test the key support at 119. As far as I can tell, the failure of the H pattern in the weekly chart, remember the Chapman wave, there's a pattern that we call the lowercase h. You come down, that's the left side low, you make an arch, roll over, that comes back, and if it takes out the left side low, that's not good action. 119.39 was the low we were looking at. We were at 119.10, not so good. And I'm looking at this and I'm saying, okay, yesterday I spent some time talking about the TNX, which is the 10-year chart, TNX.X, here we go, trading at 27.42. It is up 31 cents, 0.31, so it's 2.742 at this particular time. And what I'd say is if it takes out the high that was made back in early February, around about 27.32, I think it was, that's not good because you've had a series of arch, the lowercase h goes to a lowercase m, and that gets repeated. And that base of support never got even tested. So now you're at 27.42. If there is a breakout in the next 3 weeks above the high of the 18th, the week of the 18th of January of 27.99, 1 week, let alone 3 weeks, if there's a break on the upside, that's very different. And I think that's going to impact the market as a little bit of instability, all right? So I'm looking at the yields, and I'm saying bonds are very vulnerable, and the yields look to me like they want to climb higher. They're still within a trading band, haven't done anything serious, has to break above 48, the high of the week of October the 5th, to really say, oh man, that's going to be serious for the market. So far not. So let's just keep that in mind. The other thing is that with the dollar pulling back so sharply, down 14, it is saying it's under the weekly 200 period exponential moving average that this dollar break down over the last week could in fact make a peak E in the Chapman wave. Oh, I'm talking about all these waveforms. Let me just do this for a second. Peak E, and that says that the next level of support is 1.29 in gold's 1294 in the weekly chart. And if it takes that out, you're looking at time and price, certainly on the daily chart, not yet on the weekly chart, as being very important to the downside. We're in leg B to the downside. The next thing I want to look at is, we haven't talked about it, is crude oil. Crude oil is making new recovery highs, and then it keeps pulling back to the 14-period moving average at 55.81, down from 142. This is very interesting because the high today was 57.88. That went to, I'm calling it for now a PG. I don't know. I'll have to call it G/B. I'll call it a G for now. I don't have any reason why I shouldn't call it a G. But if it makes a new high, I have to consider it's recycled up. I just think crude oil is in a choppy environment right now, with probably less upside and a little bit more downside, but still within a range. I think the 54 to 53 area, that's going to be the big test of support, holding very well. Asked about Nugget. Let's look at Nugget. Nugget is the direction, a daily gold miners 3-time bull. It's trading at 19.10. It's right on the 200 period exponential moving average. MACD and stochastic are still negative. I think that Nugget can go at 19.09 right now, down 70 cents. If it closes underneath 18.62, somewhere around the 18.60s in the next 3 days, that's not good, because then there's a real good chance that it could take time and price to consolidate. And that means already I have to put a down arrow that the daily is in a sell mode, not a sell signal, but a stronger headline of sell mode. The upgrade from a sell signal to a sell mode means that it is declined a certain point. It actually doesn't say where it can go to. It just says that the designation it has right now is a sell mode because of the steepness of the pullback. All right. And then it's a weekly leg D and almost certainly a peak D by the end of the day. And then monthly doesn't look too great. So I just be careful. If there is a bounce, that bounce has to take it really quickly over 20.60. So it's nicely over the moving averages of importance. So I needed to do those things. Now, I've been speaking a lot about Boeing. To me, I wanted to do this for subscribers, and then I thought, you're talking about a 440-something point stock. I don't want to mess around with those. You can get much nicer percentages with stocks that are less pricely. In fact, I even had it all laid out and everything. I even said exactly what the price would be. I didn't put it into my newsletter, but I had it all calculated. I wanted $5. Here it is. In fact, I even put it into this little program here. I wanted the 432.5 put, and that's the March put. That's only in 3 Fridays' time, two weeks. I wanted that for Boeing, and I wanted it at a certain price. And then I said to myself, I don't think I even want that. I would rather wait and get the 440 or the 450. And if I can get the 440 roundabout anywhere close to 5, that would be fantastic. I didn't do anything. And the reason being is that it's hubris to think you're the one that's going to pick the exact high, that exact moment. We've done it a number of times, but boy, you've also failed. You also fail a lot. So it's really not worth it. Let's just wait a little bit. I do think that this is telling us that there's a good chance that the market is getting quite toppy here and that there should be some kind of a pullback. I'll just use Boeing as a kind of a headline stock to be looking at because it's just broken out so beautifully in the Chapman Wave stalk leg formation. Meantime, it's at the low of the day. It gapped up 446.01 was the open, 446.01 was the high. So this is something to monitor closely. But I don't see why you want to put up 440 times whatever it is that you're buying. You could use a put, you could use anything. But even then, there are so many stocks that are overbought and could do a better job. Even that VIV that I was showing is a potential short. Okay, so enough with that. And then I wanted to go to the XLF because that was part of another question. And the XLF did make its leg E to the upside today. The reason why the letters are so far from the, there you are, that's better. So this is a leg E, and I don't think that we're going to go much higher than a leg E for the shorter term until we do some testing of the low 26s. Let's see what happens there on the XLF, S&P Financials. Dow's up to 60.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So there are a couple of things that I want to look at today that I think is going to tell us a little bit about what to look for. It doesn't tell you what I'm expecting. It tells you what I'd be looking for. You see, the VIX index is at 1421. It's got a rising series of technicals. That's the MACD, the RSI, the stochastic, all quite a bit higher. And the price on a percentage basis has gone from 13.51 to 16.17. So 3 points. So that's like, what is that, 18, 19, something like that percent. and then it pulls back. That's a big percentage for really, we're talking about a $13, $14 instrument. Now, what's going to be really important, because this is a Friday, you will see that this is the third Friday now in a row where the volatility index, the VIX index, is trading under the 200-period moving average weekly chart. And look, that doesn't happen very often. And in fact, we were 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. I believe it's 22 weeks that, sorry, that's 18 weeks, 20 weeks. This is the 22nd week that we've been above the 200-period moving average, and it's just the last 3 weeks that we've been under it. And the day's young, anything can happen, but I don't think you're going to go from 14 to 15.25 unless there's just a real bad news event later today and the market just takes a dive. But this is saying to me that there is some interest in buying insurance in the volatility index, and that's the reason why, even though that we just almost, in most cases, almost made a new recovery high, the VIX index has not gone to a new recovery low. What would you call it? Unrecovery low, a new unrecovery low. And because of that, and there is an alternative wave count here, I'm saying, let's go one step at a time. A, B, C, D. I don't know why I didn't do that. Let me just fix something here. I'm looking at this for a couple of days now, and I'm saying something looks wrong with this notation, and now I can see why. That should have been A right there, brand new A, brand new B, brand new C, and there it is, D. Okay, there we go. Everything's good. Now, what's really important about this is the MACD and stochastic and the weekly chart are terrible, and the monthly is also very poor. And that's saying to me, don't ignore we can call it the nascent strength of the volatility index within the context of a very benign number of 14. Underneath 16, especially underneath 15, is saying to me there is internal buying going on. And that's the reason why they call it the fear index. You know, I think it's a really good gauge of fear when it spirals up into the high 20s, the 30s or higher, as it did in December, 36.20. But most of the time, historically, look at this. If you look historically, it's just it's just stuck in a range. I drew this bluish line in some time ago to show that most of the time it's under 20, it's in the teens. And in fact, if I can just do this, most of the time, whoops, I grabbed the wrong one. Okay, there it is. Most of the time, it's, look, yeah, that's it exactly there. So that is at 15.5, right? So most of the time, look, the majority of months over the past, since mid-2012, the price has been underneath the 15s. It's just these big spirals, hysterical spirals that have an impact. So I'm going to make a big deal to say, Technical Friday today, I wanted to go through a couple of things, and I wanted to say the levels to watch at this particular point haven't changed. I had always been worrying that there was a long time ago when I changed the levels on the VIX index, but for at least 5 or maybe 10 years, it's been pretty much the same. I'm going to do it again. I think we are getting to an area where we're going to have to start changing, but we haven't yet. If in the high 15s, it says the market's a little bit vulnerable. Going into the 17s or 18s, expect some triple-digit down intraday action. Going to the high teens, low 20s, triple-digit action on the downside. That's what you can anticipate. So here in the 14s, there should be support. And that's the reason why I didn't want to get aggressively short. We've got certain positions. They're working out okay right now. Day is young, anything can happen. But most importantly, what I am looking at is I'm looking at the volatility index as being key. Short term is just saying there's a little bit of buying going on, nothing to make to really say, uh-oh, watch out for a triple-digit decline in the Dow. And that would say if by day's end, we're at 1414 right now in the VIX. If we start to hit today's high was 1484. If we get even close to 1484, I think you'll start to see some intensive selling. Just wanted to check this out now, if you don't mind. Okay, so we've gone to a leg B in the 2-minute chart, starting to stall, getting a little bit of resistance here. This 94 level, 2794 to 2796 is absolutely key, because that's where I think if there is going to be a turn, it's going to be between here and just slightly higher. All right, now let's go to the next thing I wanted to talk about. I've spoken about interest rates. I've spoken about the gold. I've spoken about the dollar being okay. What I have not spoken about, and I mentioned oil, but what I haven't spoken about now is that there are certain stocks that were extremely important in 2018. Those, of course, were the Amazon, Apple, Google, Facebook. So the FANG stocks and Netflix tell me that they have been just stuck in a range. Amazon makes a high of 2050, a low of 1307, trading right now at 1658 in the about a third of maybe 3/5 of the way. 3/5, yeah. So if you look at Apple, Apple today is up 89 cents, made a little nominal high, peak A, peak B, then F/C. Could even go a little higher, but I'm looking at this and I'm saying, all right, Apple, you're stuck. 233 was the high, 142 round number was the low. You're at 174. You're struggling. Netflix at this point is trading. Where did it go? Netflix, NFLX. Just got stuck. Made a peak EFG. I think that's no, that's an E and that's an F. So it makes a peak F just 5 days ago. Kind of stuck, but it hasn't broken down. Needs to be watched really closely. Leg B in the weekly chart, all-time high. Did I not type that in? Don't tell me I got to do that again. All-time high around about 437. What was that? All-time high of 423. A low, most recent low of 231. That's a whopper of a pullback. Now it's about halfway into the range. Still nothing much to see. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I wrote, so the Facebook goes to a high of 218 in July. December comes down to 123, a massive decline. It's now only at 161. So this is very interesting to me, because if you look at HACK, H-A-C-K, HACK, that made a high of 40.72, plunges down to a low of 31, let me just get that exact price, 31.56 on the 24th. Type that in, I don't want to keep saying it, 31.46. And what happens is it rallies and it goes back to 40.17, like a V-shaped formation. This is the prime cyber security ETF security stocks. And I had mentioned this, I don't know how many times I said to subscribers, and one particular stock we've had on the list for I don't know how long, but we just never, I just didn't put it on the list to buy. Dumb. In leg D with a doji, silent doji yesterday. Watching this for some kind of reversal going into next week. Doesn't have to be, but right here is where I'm expecting to bump into some kind of resistance. And CyberArk software, I actually passed it when I go to tennis out here, into tennis. It's an Israeli network security software company. And I don't think, maybe this is the, maybe it's a head office here in the Newton area in Newton, Massachusetts, just a few miles outside Boston. But what a spectacular stock. Just 2017, it's trading at 40. And now it's at 109. I mean, really. So that is, other areas have taken over as the biggies have started to pull back. We're also anticipating a bunch of IPOs coming this year. When IPOs, especially really big IPOs come in the market, very, very sexy stocks, the big names, tend to get sold so that money is made available to go to those IPOs. At least that's what I've noticed historically. So we'll be watching what happens. So cyber's doing very well. The IAI, which I'd spoken about, has gone up a little more. It isn't looking great, but it's looking much, much better. And this is the iShares broker-dealer security. So you've got C1, C2. We could even call this a new leg D right here. Whatever it is, at 62.50 over the 200-period moving average, it shows that it's a viable entry into what you can look at on the long side on any sharp pullback coming up. So let's just keep that in mind. As far as I can see, there is a good chance that we're going to have a rotational correction. Remember the unison low on the 24th and 26th of December, that kind of, I was asked, how come you were looking for a retest, not of the lows necessarily, but you were expecting some kind of an H pattern retest? Because the low that was made in December turned out to be very much like the March 2009 low, where it was just a V shape. Very seldom it happens. But what happens in markets is that occasionally you'll get a unison where all the key indices, in fact, all the indices make a low on the same day or within a day or two, like March the 6th and then March the 9th over the weekend. You had to wait for Monday for the S&P in 2009 to make its low. And that makes a difference, but you don't know until you've gone over a certain level without a correction. And you can see the IAI trading at 62.50 up 73 cents has had a correction. It's gone to a leg A and then a peak A with a double top at exactly the same price. And now it's in leg B. And the MACD and stochastic are very good. These are good. And this is saying to me that I don't know what the news is going to be, but it's going to have to be really bad news to start a kind of a waterfall cascade that takes it past, like in the Dow, that can take it past the midpoint right here, this yellow oval in the 24,500s. Yes, we could get 24,873 is a 200-period moving average daily support, and it could break under there. But once you get into the 24,500s, I don't know yet what the bad news will be, but it'll have to be really bad news to take it much lower than that. So far, I'm looking for some kind of a corrective moment, more a digestive phase at this stage. That's what I'm looking at. We still have long positions, but I'm lightening up on the long positions just to start raising cash because I think this is an important period. I think there'll be another use for cash, maybe in the stocks and areas that we missed on the initial move to the upside. That's kind of the way I'm looking at it. That's what I wanted to impart today. Now, as far as the, let me just do this. So we've looked at the different areas. I didn't look at the IWM. The IWM right now is having a little bit of a bounce, nothing like some of the others. At 157.75, the high was 150. It says 156.24. I just forgot to update. I think that was 59. 159.50. Let me just change that. 159.50 is 159.50. There we go. And that 159.50 area was the recovery high. All-time high is 173.39. So this is just over halfway in the corrective process coming back. This is so far not a bad candle, but I wouldn't be surprised if we see a right shoulder fade here that's somewhere within about 50 cents. The IWM starts to curve over, and then if it takes out, this is going to be really important support. It isn't the low of the 27th of 156.12. I'm going to go a little lower. I want to see a close under 155.65. You close under that, you're looking at something very different. You're looking at the right side in a corrective process, treating this as not a midpoint line, but as, where did it go? Give me a midpoint line. I guess, oh, there it is. Right, so I'll put that right here. And what I am saying is that there could be a little bit of a bounce with weaker technicals, maybe somewhere over here, or maybe a little earlier, and then there could be a pullback. What happens by Friday a week? And what is the date? That's going to be about the 9th or something. So somewhere around here. Yeah, exactly. Good. So somewhere around here, we'll see where the MACD and stochastic are. If they're still holding flat, holding okay, although the stochastic's now under 80% at 79%. I'm just watching this. It seems to me we're starting to run out of energy to the upside. Hey, that's my opinion. A break into the 163s, 162 even, is fantastic action. Really, just fantastic action. Can it do it? I'm not so sure. All right. So a couple of questions I had. Would I look at, what was that? I looked at the TLT. That was a question. Would I look, XLI, because the XLI is a much better industrial index than the Dow. Dow is no more really. It's a mix of cyclical and secular. So the XLI made a high of 77.13 on the 25th, and the S&P Select Industrial Spider Fund made a high today, round number open on the 25th. 77 goes to 77.13. Today has 77.10 high. So I think we're looking at the right shoulder here is starting to weaken. And that's why I'm saying I think that Monday could start the corrective process. I think. Let's see. Okay. Here's a question that is quite important as far as I'm concerned. Would I look at the XLE? Give me an assessment of the XLE. Okay. XLE is the energy S&P. This is the S&P Select Energy Spider Fund. Basil Chapman, Tiger Technicians Hour. Dow's up 62. S&P's up 10. I'll be right back and we'll look at the XLE when I return.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So looking at the 2-minute chart, the 2796 area, we're there now. 2796 to 98 is going to be really important. If the Dow at plus 71 after that very sharp pullback is able to close above plus 60, I'd said if at intraday there was a sharp pullback, and suddenly we're trading, I can't remember what the time I said, a very detailed report. And I said at a certain time, we were trading under 60 or less in the Dow, and the S&P is only up about 6. That would be very poor action. So far they're doing okay. They've bounced back. Dow's up 73, and the S&P's come back to plus 12, but the Dow was only up plus 32 at one point. So 96 to 98 area, 2796, 2798. We'll watch that closely. Let's get back to the story here. So the XLE is up 75 cents to $66. Leg C, probably a peak C today in the weekly chart, and nice rebound going from the 79 area down to the 54s in the spider, and then it's come back to 66. So good action so far, but now it's starting to move sideways. This is a pattern that I call the Chapman wave unconventional flat base restart. That explains everything. It's kind of descriptive. It's a very complicated title, but that is, in fact, the whole thing. And what it says is after the instant restart, if there's a pop to a leg E/A, and then you come back down, and at any point very quickly after that, trough after D, if you go under it, and then after that, you start your rally. But every time you rally, you come right back into the 61, 62 area. That says this is a Chapman wave unconventional flat base restart. And then after you make a D, even an E sometimes, there's a chance that if you start to pull back, you can come right back to in this case, 61.30 low bar that is part of this whole unconventional flat base restart. So if the XLE starts to trade in the 67s, I don't know how it's going to come back to 61s, but if it starts by Tuesday, it's testing 64, there's a good chance you're going to be pulling back. So it's right on the cusp, like most of these indexes, getting very toppy, but holding quite nicely. Hey, have a wonderful weekend. Stay tuned for Steve, Dave, and Tom O'Brien, and check out my opening call newsletter, daily newsletter, very comprehensive report, give you parameters for everything that we're watching, and have a great weekend. Hope to see you back here Monday. Thank you for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.